Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I think we can get talking about Raymond, which in fact reported what was a strong set of numbers. We have with us Sanjay Bal, the Group CFO of the company, who joins in to discuss the Q4 performance. Hi, Mr. Bal. Thank you very much for joining in. Well, overall, it was a good set of numbers, but tell us a little bit more about your margins, which have improved around 160 basis points. Are they sustainable, as well as for your verticals, such as your textile and branded business?
Businesses have made a strong recovery from really the impact of the two structural reforms which impacted the entire economy last year, which was demonetization and GST implementation. So we've seen significant growth in revenues and in margins and profitability across all our segments. Our branded textiles has grown by 10%. Our branded apparel has grown by 19%. Our garmenting business has grown by 7%. So all in all, it's been a year of consolidating the revenue growth, of business profitability, of working capital efficient management, where we've shaved off 14% of our working capital efficiencies. Our capex cycle has also come to an end with this year. So the heavy capex that we saw in 17-18 of 400 crores will now see lower capex as in the years ahead. Our ROCs have improved significantly.
Okay. The board has approved, to develop 20 acres of land. Can you provide us more details of it?
Yes, this is really a long-awaited, decision which we have been working on each of the quarters. I have been asked this, and I've said that there is a team which has been working on in terms of evaluating various options and options to monetize the land. So it's happy to report that the board has approved our plans to monetize 20 acres of land for development for residential purposes. This is a development which will be done by the company, and we are in the final stages of preparing the project plan.
Mr. Bahl, you said the cost is going to be about 300 crores. Could you tell us where this is exactly going to be used? Is this essentially 300 crores for construction, purely construction?
Yeah, this is going to be done, phase one is going to be done by the company. So we have secured major approvals already, as we have mentioned in the press release. We are in the process of really fine-tuning the plans and implementing the suggestions which the board has made. So in a couple of weeks' time, we'll be ready with the project details, which we will then inform everybody, the investors and the press, on the specific plans. As of now, what we have is approval from the board to work on a development of 20 acres, which is around 3 million really square feet of saleable space. The project will be executed over 5 to 6 years. In the first year, we have earmarked about 300 crores.
Mr. Bahl, how are you planning to fund this?
See, there is no cost that we have to incur towards the land acquisition, except for the approvals that we have to secure. There is a cost towards that, and we've spent already 100 crores in the fiscal year 17-18. We have earmarked another 300 crores for next year, and this is largely going to be towards construction finance. For land, for approvals and construction finance. And as the project, since the project execution is over 5 years, we do not see any major need for funding beyond what is the construction-linked financing. But we will be working more details of this, and the communication on this will come out very shortly.
Okay. Can you give us a sense in terms of what the investment strategy would be for your retail vertical?
If you look at 17-18, we added about 190 stores, and our net addition was 139 with closures of 51 stores. we have developed a very unique model of a mini TRS asset-light and efficient model of a small store which really is targeted at the tier 4 to tier 6 towns. In the year 17-18, we opened 91 stores, and all of them were franchise stores. Our strategy is that all the stores, retail stores that we open, at least 75% of them would be franchise-owned and 25% would be company-owned. And we will continue with this strategy in the year 18-19. The ambition is to open another 250 stores. We seek to rapidly scale up the retail footprint. We are already at 1,219 stores end of 17-18.
Right. So since only 25% is company owned, the requirement for capex is minimal, right, Mr. Bell?
No, there is capex for these balanced 25% stores which will be company owned, but that has been provided for. So for the next year's, which is 18-19, we are looking at really a capex of 250 crores across all our group companies at a Raymond consolidated level, and which will include about 40 crores of capex for our apparel division.
Look at the stock, Mr. Bell. As we were speaking, the stock is spiked up. It's up at the day high, 5.5% higher. Thank you very much for your time, Mr. Bell, and good luck. We speak with you soon again. So 60 rupees on Raymond, 1123, 1124. I mean, I guess the market likes the commentary because it's not as if it started reacting early on.
Rank outperformer. I mean, in the past 12 months, it's gained around, what, 45%?
Absolutely.
It's a huge